The Fed minutes showing again that the Fed is penciling in two more cuts this year. And then tomorrow we'll get Powell speaking before the stock market opens. We'll have Fed Chair Powell speaking along with other Fed speakers. We have a government shutdown, so we didn't get the jobs report next week. On Wednesday, we were supposed to get the CPI on October 15th. So again, if we still have a government shutdown by next week, we may not get the inflation data either. Now, we got that divergence going on with the RSI in the daily time frame. We went up and we made a higher high. You got the same thing going on here with the awesome oscillator. You got this divergence going on. We're also forming one on the MACD here with the S&P 500 daily chart. We still have a bullish reversal of conditions. My signals still remain bullish. We'll see if we get more red bars or if it's followed by a green bar with Powell. We'll be watching to see what happens. We're at major resistance. This is the S&P 500 daily chart. No red bar on the Nasdaq. Again, you got the same thing, a possible divergence. Again, signals still remain bullish. You gotta, in order to turn down, you've got to take out the 10 and the 20 period moving average. The 10, the red, the 20, the blue. And if we do that, it would be bearish. We're still up here. And again, the last few days, we've been flirting with the trend line from the upper boundary of the broadening formation. We're up 1.19% with the help of NVIDIA and the release of the Fed minutes. Nasdaq was up 296 points, up 1.19%. Same thing, you've got the divergence going on here on the MACD in the most recent price action, and you've got it going on with the RSI. Please support the channel with the link directly below that allows me to be able to provide you this information. If you follow the link below, it'll take you to a secured site and you can donate any amount you want or make it a recurring donation. If you do that, I thank you. I just ask that you partner with me rather than have sponsors and sell you a bunch of stuff you don't need. So if you could take the time to help out, I would really, really appreciate that. I thank you for your consideration for that. The VIX continues to go sideways above our 50-period moving average. The bands are tight, super, super, super tight. So far, the VIX, the spikes in volatility have been relatively mild. Again, but you're holding above the 50. When you're above the 50 on the VIX, bad things start happening on the S&P. If we drop below the 50, that's good for the S&P 500. Hit the red trend line on my weekly chart if that happens. Larger channel. If we stay above it and volatility starts increasing and you start moving above this trend line up here from these previous highs over here, and you start moving above the 200 period moving average, you start getting above 18 and then you start getting above 20, you start seeing that happen, you're going to see volatility in the S&P 500. We are seeing the MACD in positive territory. This is another bad sign. So far, it hasn't played out. So far, we went into positive territory and we've gone sideways. We broke out of the bullish wedge and we back tested it. This is what was present back at the February high. We got the MACD in a positive territory. You ended up getting above the 50. Here you just surged above it and you started seeing the volatility in the S&P drop 21%. Here we saw the S&P form a divergence in the most recent price action as we broke out. You got some volatility on the S&P down here, and then we've come back up, but we're going sideways, and you're moving to new highs on the S&P. You're not moving to new lows on the VIX, so there's that discrepancy still. We had the hollow red candlestick over here. We had the hollow red candlestick over here, but so far, the VIX is just going sideways. It's going sideways, consolidating for either a bigger move up or a push back down to test the lows, one or the other. But you're still holding above the 50-period moving average. You still have the MACD in positive territory. As long as you have the tight bands, as long as you have the VIX above 50, as long as you have the MACD in positive territory, the risk of more volatility is still present. Nasdaq's come up to this trend line. It's slightly overthrowing it. This is our log scaling, and with our linear scaling, we've overthrown it more than here with the log scaling, but you are overthrowing it right now, and you're getting this divergence as we're hitting this trend line. Again, the last two times we hit this trend line, you had a 16% sell-off in July of 2024. December, you hit it. got a higher high, slightly higher high in February, and you ended up selling off nearly 26%. So again, going to be watching. Do we see something similar happen here? A sell-off back towards the 200 and then a push. If we get just a 16% sell-off like we had over here, you'd be moving to levels beyond the 200 period moving average. What I'm watching is, do we end up getting a top right here, right now, which is possible, or do we sell off and go get one more push higher? But paying attention to these divergences and the MACD, we have one in the most recent price action. If it ends up rolling over here off of this trend line or overthrowing it as we are right now, again, we'll be watching to see if this divergence begins to play out. We have Powell speaking tomorrow. We'll be watching to see what he has to say, and then how does the market respond to that. We're at major resistance with divergences setting up. We overthrow this area more? Better define the divergence, or is it wrapping up and we end up turning off of this level? Here it is up close, the daily chart, and again, we're just under the upper band. We're just slightly overthrowing the upper boundary of the broadening formation, but yet you've got this divergence here. Is it done? Is it still carving out? Do we end up getting above the Bollinger Band and overthrowing the trend line more in the daily time frame with our broadening formation with the log scaling, or do we turn off of the band here? Again, in order to turn, you got to take out the 10, you got to take out the 20, you got to take out the momentum cloud. We're going to go back and try to test the 50 to take it out and get a bigger corrective move or possible reversal. Because of the extent of the move, there is the possibility that this could be a top. And we are coming towards the trend line right here. If I connect this peak right here to this peak right here, we're coming up to that trend line right there. Again, this possible larger rising wedge. Again, you can see the divergence here by zooming out. This divergence right here, it only gave us a 4.28% sell-off, and we found support at the 50-period moving average, and then we've had the September run-up. Now you've got another divergence. If this trend line right here begins to break, if we begin to see that happen, say we turn right here off this trend line, or the larger, just overthrowing that upper boundary of the broadening formation, if this trend line right here breaks, then again, the door is open. You're taking out the 10 and 20 period. If you do that, if that happens, doors open to test the 50 and the trending cloud here, eventually heading back towards our horizontal support from our February high and our 200 period moving average. Signals remain bullish. If we see rejection at these resistance levels, then we need to see confirmation with the trending signals turning bearish, the momentum signals turning bearish, and then we'll be looking for clues. Do we pull back and get one more push higher, or are we topping right here, right now? Is this a 5-leg push higher that's completed with a 1, 2, possibly 3, 4, and 5? And this move right here is the wave 5. So do we try to rally with Powell above these resistance levels, or do we end up getting rejection surrounding these levels? We'll be watching the trend line here from our recent highs here on the Nasdaq, and that trend line from the broadening formation that goes back into July of 2024. We had a rising wedge with our rally from the September low, and it changed the trend line from these lows over here. We broke that. Then we rebounded back up again above that trend line, and so I've taken the trend line from here. You still have a rising wedge, but look where we stopped today. The rally ended right at the trend line here from these previous highs here. Again, going slightly higher than the previous peak, but some of these resistance levels I'm looking at here in the 15-minute time frame. The trend line going back a little bit further, as we saw on the daily chart, and then that one going way back to the 2024 peak. So some interesting trend lines here per day and on the daily charts. And here's that daily chart again. The trend line here going back into August here, this August peak over here, and then showing you on the intraday chart is just from these more recent highs over here, but we're slamming right up into that. So some interesting trend lines intraday and on the daily chart. And this daily chart going all the way back to the 2024 peak. So some interesting levels of resistance that we're at. And if I just draw the trend line in here from August, you can see connecting August to September, now into early October, right into this trend line intersecting with it. Now, with the linear scaling, we have the broadening formation here, but we're overthrowing the upper boundary here. And this is a trend line from the 2020 low over here. So again, we're overthrowing that level just a little bit, but we're slamming up into and just slightly overthrowing the upper boundary of the broadening formation with our log scaling. So again, going to be watching to see if we drop back below the trend line here from the 2020 low, if we drop back down and see rejection at this trend line with our broadening formation. Broadening formation, again, is a little bit better seen with that log scaling, and that's why I show it to you on the daily chart. Don't forget, last week we closed out with that 9 count here in the weekly time frame. Sometimes you get the 9 counts, you turn immediately. Other times you go a little higher. Over here we got the 9 count, went a little bit higher, and then we turned. Here we got the 9 count, we turned immediately. Bar 8 was the low of the count. Here we have a 9 count, we got a trend extension, and we have a 9-9 signal on the Nasdaq weekly chart. Going to be watching to see what kind of candlestick we get by the end of the week and what happens by the close on Friday. Again, got this government shutdown going on. Earlier in the week, President Trump said that in 4 or 5 days we would find out how many of the furloughed workers would have permanent layoffs. Again, the permanent layoffs, they could eliminate a lot of jobs, end a lot of programs, government programs, and they can end a lot of government agencies. Trump uses this opportunity to try to shrink the government. And again, we're watching. If he does do that, and again, he's talking 4 or 5 days, that means the weekend, Friday, Saturday, Sunday. If we find out that a lot of jobs, federal jobs, are on the chopping block, in an already fragile labor market, how does Wall Street respond to that? Again, it could impact the labor market, it could impact consumer spending, and it could impact the GDP. The Treasury Secretary is already warning about the GDP being impacted. Watch this 9 count. Again, we're moving a little bit above it. We'll be watching. Over here, we got a little bit above it with this 9 count, but we still ended up dropping 16%. If we end up dropping 16% again, you're moving back to the 200 period moving average, just beyond it there in the daily time frame. Nasdaq weekly chart here. S&P has come up to that trend line from the 2023 low. Here it is again from the 2023 low. You've been slamming into it, slamming into it, slamming into it. We're slamming into it right now, slightly overthrowing the 2018 trend line, hitting the red trend line, which again could be marking a top. The red trend line, you're having all these touches at the bottom, and now you're hitting that upper boundary, it looks like, at our 913. We'll see what the candlestick looks like by the end of the week. But if I bring it up close, you can see we're just under that red trend line. We're just over the blue one from the 2018 first peak in 2018, and again, hitting that 2023 trend line. So again, I'll be watching. Do we get rejection here? Do we go up and hit the red trend line? And then I'll be watching what kind of candlestick do we get by the end of the week. Signals still remain bullish. Here you can see my trend lines. The red trend line connects the 2020 low to the 2022 low, excluding the shadow, connected to the 2023 low, connected to the 2025 low. And the parallel boundary to that is the red trend line from the 2022 peak that's directly overhead from where we're at right now. The blue trend line, we connect this 2020 low with the 2022 low, connecting, including the shadow, I should say, not touching these other lows, and that is the level that we're just overthrowing right now. We've slightly overthrown that level. You get your 2023 trend line, slightly excluding this low, connecting this low and this low right here, and we're slamming up into that trend line the last several weeks. So there you have resistance levels. If I flip over to the daily time frame, this is a daily time frame. You can see again we're hitting the trend line here, came down there from the September high there, September 23rd or so, and then now slamming into it again, overthrowing that 2018 trend line just under the red trend line. If we turn down, this trend line right here from the May low continues to be support. We keep hitting it over and over and over again. Here we've breached it but got right back above it. You hit it over here at the last sell-off after the September 23rd peak. You end up turning here and breaking this trend line, you'll get a bigger sell-off. So again, we're moving tighter between these trend lines, this rising trend line and this trend line from the 2023 low. Important support and resistance levels here on the S&P 500 daily chart. that tomorrow, with Powell speaking, we are going to get another possible 9 count if we close above the bar from 4 bars ago. Bitcoin recently caught up to bar 8 and it got canceled out at 9. If we close down, if we end up selling off with Powell, the 9 count can mark a top or it can be a lower high. Bar 8 is the high of the count. So bar 9 doesn't have to be, but it still could be. Why is that important? Some of these counts have produced pullbacks, no reversals so far, but pullbacks with these 9 counts that we've seen so far. Pullbacks or sideways moves there in July, going sideways in July and August, and then getting the September run-up. But here we have another potential count tomorrow. We still have those 9 signals in the weekly time frame on Nasdaq and S&P. Same thing with the Nasdaq. Again, wide range bar today, moved to a new high. So the bar 8 is the high of the count. If you get bar 9, you got to close above the bar from 4 bars ago. 1, 2, 3, 4. Got to close above this bar. Otherwise, you cancel it out. Bitcoin canceled it. It's out, but it still may form a divergence with Powell. Didn't quite reach the trend line of resistance. You can see my latest Bitcoin video made earlier today at the end of this video. Interesting trend lines that I show on Bitcoin. It's doing exactly what the S&P 500 and Nasdaq have been doing recently. I want to check that out. Over here, we only got to bar 8 and it got canceled out. Do we see that happen again or did we complete the count? I'll be watching this count tomorrow. We are at major resistance for the Nasdaq, slightly overthrowing it on the daily chart with our broadening formation, hitting resistance so on the daily and on the 15-minute chart as I'm covering in this video. Dow's got an 8 of a 9 count. We're at bar 8 right now. The Dow's going sideways. The Russell has a 7 of 9 in the daily time frame. Both the Russell and the Dow, both the Dow and Russell are getting 9 counts in the weekly time frame. You got a doji this week on the Russell, at least so far. The week is not over yet, but you got a 9 count. It was a 9 count that marked the bottom. 13 count marked the top. We went a little bit higher. So again, counts to be paying attention to. Again, we got the 9 counts on S&P and Nasdaq last week in the weekly time frame. Now you're getting a 9 count on the Dow and the Russell this week. This is the Russell weekly chart here, and the Dow is getting the 9 count in the weekly time frame. So again, you're getting 9 counts on the Dow and Russell this week. You got 9 counts on the Nasdaq and S&P last week. You had the 9 count bottoms on all of these weekly charts. Could the 9 counts that are forming at major resistance mark a pullback or reversal? That's possible. S&P daily still watching these divergences. These stochastics turn back up here. We still got this divergence going on with it though. And again, on the MACD, like Nasdaq, we're right below the upper band. So far, we've stalled at it, the upper Bollinger Band in the daily time frame. We have this massive divergence, one in the more recent price action here, ahead of Powell's speech. Is the divergence wrapping up, or do we go above the upper band and overthrow the 2023 trend line on the S&P, reach the channel line, the red one that I've been talking about? We'll be watching the upper Bollinger Band. We keep flirting with the resistance level of that 2023 trend line and the trend lines I've been showing you. Here we turned down off of it, rose back up. We had a triangle that could have been a continuation or reversal, as I talked about. We had a gap and go. Here we had a gap and trap over here, gapping higher, moving in the other direction intraday. Here we had a gap and go. You gap higher and you just keep going in the direction of the gap. A gap and go. Always watch a gap. Is it a gap and go, a gap and fill, or a gap and trap? Now we're back up here at the highs, and again, back up at resistance. We'll be watching what happens. Powell speaking tomorrow. And again, I believe it's before the market opens. The divergence on the 15-minute chart only took us back towards the 200. We didn't even reach it. Got back above the 50 with our gap and go pattern, and now we're back up at the highs right here. If I connect these points here and here, well, we're just under that level. So again, we'll be watching all these resistance levels in the weekly and the daily time frame that we're currently at. Now, if I take the trend line back a little bit further, again, here in the 15-minute chart, I connected those levels. If I take it from here back over to this previous peak with this rising wedge directly overhead, you got this trend line right here. So just another level to be watching. You got a big divergence forming in the daily time frame. You got a big divergence forming here in the 60-minute time frame. and down here on the MACD 60-minute chart of the S&P. Similar divergence on the Nasdaq. Again, coming right up into this area of resistance. So we'll see what happens with Powell tomorrow. And again, larger divergence developing here on the MACD. Had one right there, pulled back to the 50. Now you've got price moving higher, but the MACD is not. You've got this larger divergence. So be watching the 60-minute charts. The average of the put-to-call ratio is still diverging with the S&P 500 at extremes with the raw data of the put-to-call ratio, but it's turning back up as we go down to these levels. So somebody's buying protection as we're going up into these resistance levels. This is the same type of divergence that we had back at the February peak over here. A similar divergence developed at the July peak. It gave us a smaller pullback. Being at new highs, we're at still a neutral level here, forming a massive divergence on the fear greed index with the S&P 500. The S&P 500 has moved up to new highs. The fear greed index is not. We've got this massive multiple point divergence, which is exactly what we had back over at the February peak. A multiple point divergence just before we saw a massive sell-off. Multiple points. Well, the put-to-call ratio looks very similar as it did back, 5-day moving average of the put-to-call ratio as it did back in February. S&P 500 here in the upper window, diverging with growth. This is what happened back in February. Made a higher high in the S&P, ended up forming a larger divergence on the RSI. But here with growth, you got a lower high, ended up diverging, and the sell-off happened. Again, may not be done yet, but the S&P is hitting major resistance. Trend line on our weekly chart is directly overhead if we try to go higher above the 2018 trend line. And again, I don't know if it means anything, but junk bonds right now are diverging with the S&P 500. S&P went up and made a new high. Junk bonds is making a lower high. Sometimes divergences mark turning points. Sometimes the divergences have formed. They're just pullbacks. Other times they produce major reversals. Sometimes they don't play out. Which is this? I don't know. I'm just letting you know. Got this divergence between the Dow and the transports, the Dow in the upper window, the transports in the lower window. We've got it in the more recent price action. We've got this larger divergence as well. The Dow's moved to a new high. The transports have not moved above this peak over here. It still is not moved above the peak from 2021. So again, watching this divergence, sometimes divergences mark turning points. The Dow is getting a 9-count sell signal in the weekly time frame, along with the Russell this week. Something we're paying attention to.